Hello and welcome to another update video about Ethereum. With Ethereum at the moment there isn't really any evidence that the downtrend is over. Yes, we are moving to the upside at the moment and this could be another breakout, but we always need to be careful not to get too excited because we haven't really broken out. Yes, we have broken out of the smaller trend line here. That is a first signal, but we did that before and failed. So we can now draw actually some kind of a corrective channel. So if we combine or connect the top of the wave 5 of 3 and the wave X, that gives us the possibility or allows us to draw here some kind of a corrective wave channel more or less accurately. You know, there's always different ways of doing it, but the point is that I think this could be here a resistance area, even though we have only 2 touch points. But if you connect wave 5 or the top of an impulse and the wave X high, that gives you or allows you to create a corrective wave channel. And the move to the upside here at the moment only has 3 waves and it could get rejected there. Either way, it's an important trend line, I think, that could allow us to understand when the downtrend is over, because if we break above that, that would be sort of the first real signal that this is happening and that we are already in a breakout to the upside. At the moment, this to me looks only like a WXY corrective pattern. That is what I will assume as long as we stay in this channel and as long as we stay also below the wave X high. So any further price action to continue with this correction in a wave 4, any further price action should stay below the wave X high, yeah, and also should stay in the channel. So breaking above it would be a really positive signal for the continuation of the uptrend that would be generally expected. But are we ready yet or not? At the moment, it's looking like we are following here just a channel to the downside, just a corrective wave channel. And again, as long as we stay below the trend line, we're just following it. So this is not yet a real signal. However, what is interesting is to take a look at the Fibonacci levels as well. So there are now things that we can look at that allow us to understand when is this wave B finished. So as I said, I see this here as a WXY and in the Y wave an ABC. Sometimes I get the question, what is the difference between WXY and ABC? Well, the WXY is basically just a more complex corrective pattern, and each of these subwaves consists of another corrective wave. So what you get, for example, is a WXY, and each of these subwaves consists of an ABC itself. Okay, so it's a so-called 3-3-3 or double zigzag pattern. It's just a bit more complex, but you see it's still a lot at the moment, yeah. And if we see then this as a wave A, this would be a B and the wave C to the downside, and this we can calculate here the fibs or look at the fibs, and it allows us to understand what are the possible resistance levels. At the moment, we got rejected very strongly from the 61.8% retrace at around $1,600. Now, this is obviously a key level for a B wave. I would allow it to get to the 78.6% retrace, but if you get above that, that would again be a strong signal that this correction is already finished and we are heading to the upside. Yeah, but at the moment we got rejected here, and it would be an ideal level to turn around for further downside in a wave C of Y of 4, yeah. So key support would be the support level of the channel. Yeah, if we take a look at that. So that would be around, depending on when it happens, maybe around 1536 or something. So in summary, there are 3 different signals that we can use here that would tell us that the downtrend is over. First of all, would be a move above the 78.6% retrace. That would be at 1619, then a move above the channel. And you can see already that these levels are very similar to each other. And then a move above the wave X high here at around 1636. So all of that, yeah, all of that would be together a good signal that we are starting wave 5 already. As you can see here also at the moment we only have 3 waves. A fifth wave would already be another good signal, right? At the moment we only have 3. So if we make a new high above wave B, that would already be a helpful signal to establish, you know, that the downtrend is over. But as long as we are in the channel, as long as we don't see that, the primary expectation has to be to make one more low in a wave C of Y of 4. And you can see in this area here, you have a lot of possible support, yeah, and a lot of space still, and we can max it out all the way down to 1460. Now I can give you a target for wave Y. So let's say it's not over the downtrend, yeah. An ideal target for wave Y, and there are different ways of calculating these targets, but let's say we do that. That would give us a target, which is the 1-to-1 ratio of 1534. And that would be quite close to the support level of the channel. So I think it is actually not too unlikely. That is one target. And then we can also calculate a target for the C wave, which is sort of just a different way of doing it. Take the wave, the length of the wave A. We assume wave B has topped here. This, of course, there's no evidence for that, but let's say it did. Then the target would be also here, the 1-to-1 ratio at 1518. If it loses that level, it could come down to the 1.618 extension at 1466. So these are just attempts to try to identify a more suitable support level in this larger yellow box, which is based on the calculation of the Fibonacci retracement levels of the wave 3. So retracement of the wave 3 into wave 4. And here you can see as well 3 possible supports. Well, the 1569 level was already broken anyway, but then we've got the 38.2% retracement level of the larger wave 3, and that would be an ideal retracement level anyway, because a wave 4 normally looks for that target at 1510, and then we've got 1460, but if we get below 1460, then this overall higher level assumption needs to be changed, because then it can't really be a wave 4 anymore what we're doing. I mean, in theory, this could also be a 1-2 setup. Then we can come down a bit lower. Yeah, at the moment I'm following this path here, and we would get one more leg up, at least one more. Yeah, there could also be 2 more legs up. But at the moment I see it as 1, and then this should finish off a wave 1 impulse. Then we should come down in a wave 2 correction. This is another attempt where I will accumulate in a wave 2 with the target of taking those, of trading that wave 3 on the long side. And that wave 3 should take us in the end to around $3,000. Now I'm talking about the larger wave 3 here. Yeah, here when all those 5 yellow waves are complete, this is sort of what I'm looking at, what I'm speculating. Someone asked me before the Fed interest rate decision, what would be the bearish pattern for ETH? Well, yes, there is a bearish pattern. There is, of course, a bearish pattern and a bearish possibility, which would just indicate that the bear market low wasn't in yet. At the moment, this is for me unlikely, but it is, of course, possible. Yeah, and for me, if we consider this as a bearish pattern, which again is possible, you know, everything's possible in these markets. I don't see it though. Now I would have to assume that this here was an ABC pattern. This is possible. It is not too unlikely. And the reason is this is not a crystal clear impulsive move that happened from the June low to the August highs. Yeah, this is, I have to count this as a diagonal pattern. So it's not a very clear impulse, so it makes it possible to count it as corrective. So any diagonal pattern can also be counted as a corrective ABC. So this is something you need to be aware of. And then the bearish pattern would have to be so there is one where I'm saying that this here then would be a wave 1 to the downside, right? Because this would be a corrective wave up, and we would make, or we would be in an impulse to the downside. Now, as you can already see, an impulsive wave to the downside is extremely difficult to count, because basically I mean, I can count this here as a wave 1, then you've got a wave 2, then we would be in the wave 3 down now, but this would be a wave 3, yeah, but then this can't be a 4, so you would have to have another 1-2 set up and then come down in 3. So this would take us down quite a lot if it is to be worked out, but this retracement is already very strong again, so it's making it unlikely, yeah. Because especially now in terms of retracements, we've reached the 1660 level, which is the 78.6% retrace. We get above that level, the bearish pattern would get much less likely. Yeah, a bearish pattern was more likely until we well, before we moved up, right? Because here this could have just been a 1, 2, 3, 4, and another 5th wave down would have been possible. But with this move up now, this has just become less likely. So yeah, I mean, there is a possibility to make another low. Of course there is, but it is at the moment not very likely. Okay, and that's my update about Ethereum. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, please check out the channel membership. Thanks a lot for watching. Bye-bye.